Good morning and welcome back to Pocket Power, your go-to channel for financial literacy made simple. Today we shall be diving into the world of loans, the different types of loans available in India, and a critical question on do you even need a loan? Stay tuned. A loan is simply borrowed money that you repay over time, usually with interest. It can help you in achieving any goal you may have in buying a new gadget or funding your education or managing any medical emergency. The lender, which could be either a bank or an NBFC, gives you money and you agree to repay it back in installments, which could be every month, every week, or on a daily basis. Think of it like this. You borrow 10,000 from a friend and agree to return 11,000 in 6 months. So that extra 1,000 which you are paying to your friend is the interest. Loans from banks and financial institutions also work in the same way, but with formal agreements. What are the different types of loans available in India? The first category is secured loans. What all comes under secured loans? Home loans, car loans, gold loans, and loan against property. What this means is if you're taking a home loan, you are mortgaging your home to the lender till the time you repay back the entire loan with interest. That's a home loan. The same is a car loan. You take car loan from a bank or an NBFC while you're free to drive the car anywhere and everywhere you want it, but the car will still be under hypothecation of the lender till the time you repay the entire EMIs back with interest to the lender. Similarly, gold loan, if you have gold lying at home and need some money urgently, you don't want to take any other loan, you could pledge the gold which you have and take loan against it. So the gold jewelry which you've given to the bank will remain as a pledge with them till the time you return the gold loan back to the lender. Similarly, if you're staying in a property, which could be either residential or you have a commercial property, you need money, you can mortgage that property with the bank or an NBFC and take loan against that property. That's called loan against property. There is also one form of machinery or equipment loan which generally businesses take to acquire big ticket machinery, where the loan is available to the business but the machinery or the equipment remains mortgaged with the lender till the time the entire loan is cleared off. The second category of loans is unsecured loans. The only difference between secured and unsecured, apart from maybe interest rate, is that under unsecured loans, there are no collaterals which are required, which means that you don't have to pledge any document, any property to get an unsecured loan. Number one is personal loan, which is the easiest form of loan available. People take personal loans these days to go on a holiday, for their weddings, or for their medical emergencies. A form of personal loan is also buy now, pay later kind of a variation, which is available whenever you log out of Amazon, Flipkart, or any other e-commerce site. So you can buy whatever you want, but at checkout, you will be asked whether you want to pay the full money now or pay later. So buy now, pay later is also a form of personal loan. If you are running a small business, you can also get unsecured business loan against your business. Of course, this will all depend upon certain conditions which are covered in the subsequent slides. Education loan. If you want to finance higher education in India or abroad, education loans are also available from banks and NBFCs at flexible repayment terms. Generally, for education loan, it's the parent who takes the loan, and the child is a co-borrower in an education loan. Credit card loans are also available. So basically, you borrow against your credit card limit for your short-term financial needs. The third category is the residual category, under which you have three types of loans. The first one is an agricultural loan, generally available to kind of farmers, poultry farmers, etc., for buying seeds, equipments, or any other essentials. This may or may not be against the mortgage of the land they hold. Consumer durables. You remember anytime you walk into a Tata Chroma or a Vijay Sales and you've bought maybe a TV of say 40,000-50,000, the store will ask you an option whether you want to pay the whole money instantly via kind of UPI credit card, or you want an EMI option on that consumer durable loan. In those cases, the store has tied up with certain, NBFCs like maybe a Bajaj Finserv. After doing the necessary checks on your profile, they may or may not grant you a loan, which can be against your TV or a refrigerator and has to be repaid back over a period of time. The last one is the overdrafts and the credit lines. Generally, businesses uh, get overdrafts facility up to a particular limit, which is again dependent on the business, the turnover, the bank balances they maintain. Generally, these are short term in nature. Now that we've seen the different types of loans available, comes a $1 million question. Do you need a loan? There are a few factors which you should keep in mind before you decide to jump on that bandwagon. One is assess the necessity. Do you really need to buy the latest available laptop or the gadget, or you just are doing it because your friend has upgraded his gadget? Remember to assess that very objectively. Second, are you in a position to afford the EMIs which will come with that loan, whether it's a personal loan or any other form of loan? A golden rule of financial prudence is that not more than 30 to 40% of your monthly income, which could be your salary or business income or whatever income you earn, not more than 30 to 40% of it should go towards the repayment of your EMIs. So, in case you have an existing loan, please check your budget whether will you be able to afford the EMI or not. If not, please choose to stay away from that loan. Third is consider options of maybe using any savings you would have, or some temporary assistance you could get from your family, your parents or friends. Last and the most important is that loans are generally long-term commitments, starting from 6 months, or home loans maybe go up to 20-25 years. So missing repayments can always hurt your credit score. Hence, understand the responsibility which comes with taking any loan, because you need to repay back the loan on time. In case you've decided to go ahead and take a loan, here are the basic requisites for any loan. One is your credit score. Ideally should be in the range of 750 or above. Credit score is a number which ranges between 300 to 900 in India, and most banks and NBFCs will check what credit score you have before they grant you any loan. Of course, there are certain banks and NBFCs which give loans to people who do not have a credit score or are new to credit, but the interest rates will be slightly higher and the loan amounts can be lower than that of your choice. The second requirement will be the income proofs. They will need to review at least 6 months of your salary slips in case you are a salaried individual, or income tax returns or your business income documents in order to assess your repayment capacity. Identity and address proof, that is your PAN and Aadhaar, should be linked ideally with your bank account. So you could use maybe online options like account aggregator, etc., to do a smooth transition of your loan application form. Last but not the least is that every lender will take at least 3 to 6 months or maybe 12 months in case of a 20+ year home loan to see the financial stability or the income and expenses you make every month from that account. Some key tips to keep in mind, some do's and don'ts. Always compare the rate of interest which you are getting from at least 2 or 3 lenders online before you decide which one to go ahead from. I would sincerely urge that please do not use any aggregator site like a Paisa Bazaar or etc. to put in all your details, because the moment you have entered all your details, mobile number and everything, you will start getting phone calls from all the lenders, as these aggregators share data with all the lenders who are onboarded on their platform. You could maybe go on any of the 4 bureaus to check your credit score rather than going to an aggregator website, if you see that there is a requirement of a basic score for getting a successful processing of a loan. You need to understand all the terms and conditions that come with a particular loan. So take time to go through the entire loan agreement so that you don't miss on any key items. And please take loan from known banks and NBFCs, and do not click any kind of unknown or suspicious links which tell you that we will give you loan at X% or Y%. Do not click such suspicious loans because you could be in for a big trap. Do not over borrow, because it's easier to borrow, but if you struggle in repayment or have multiple loans, you could land up in trouble. And do not ignore penalties, because while there might be a situation where you have repaid your EMI late by a day or a week due to any kind of exigencies, but remember, you need to always repay your EMIs on time so that your credit score is not impacted. To summarize, loans can be your stepping stones to achieve big dreams, but they come with responsibilities. Be mindful. Understand your needs, evaluate your options, and borrow smartly. If you found this video helpful, please like, share, and subscribe to Pocket Power. Together, let's build a financially literate India. See you in the next video.